The economy itself, though, proven again by numbers today, is doing very, very well. That's because, again, I'm speculating, $6.7 trillion worth of cash was printed in the last 30 months, still sitting in the checking accounts of the consumer, and he and she are spending it. I think it's just, the more I think about it, the more my blood boils. It's just so unfair. But at the end of the day, all that stuff gets shut down, and that is what I'm looking forward to and very encouraged by.
In today's video, Canadian businessman and entrepreneur Shark Tank star, known as Mr. Wonderful Kevin O'Leary, updates about the crypto market, his take on Bitcoin and where we are headed next in the crypto space. He also speaks about his thoughts on stablecoins, and why regulation is very important for the cryptocurrency industry to thrive in these volatile times, and urges investors to protect their assets moving forward while the suffering unfolds. Please let us hear your opinions in the comments section. Let's dive into his last interview now.
Everybody hates the Fed. Everybody second-guesses the Fed. Everybody says they're doing the wrong thing all of the time. You can't make anybody happy when you're the Fed chair. And that's exactly what's happening here. He's trying to, in this case, in Powell's case, engineer a soft landing, which is near impossible. No one's ever seen that happen. However, data coming out this morning proves that we are not yet in a recession. Everybody kind of knows that just by the feeling of the consumer being so strong. And so for the first time in a long time, people are thinking, wow, maybe he can pull this off, and we would know sometime in Q2 next year that he could actually bring in a soft landing, slow down inflation. After all he needs, the Fed in aggregate needs, the board itself needs, is some indication that the rate of increase of inflation is slowing. That's the key right now. And so we don't have that quite yet. There's a narrative in the market, and I want people to understand this and how CPI data is gathered. So much, 40% of CPI data is housing, shelter. And shelter is a very slow index, and so it takes up to 18 months to actually have an effect on it. But people in different markets are starting to see rent rates slow or flatten, or housing prices flatten. So really what we're probably doing in the CPI number right now is over-reporting inflation. And that narrative has been coming in with Professor Siegel, who's been talking about this ad nauseum for the last 6 weeks. But he has a point. You can't deny the fact that 40% of CPI is shelter, and maybe we're over-calculating it. Now, people do this all the time, and I'm guilty of it right now, trying to say, well, here's why we shouldn't believe this number. It's just more Fed beating and more Fed hating and more, telling the Fed what to do. And the truth is, they don't give a damn. They don't listen. They have their own mandate. They're going to do what they're going to do. And I say that'll be 75 basis points coming to a theater near you in the next few days. Well, I've come to the conclusion, because I have my own index to look at, which is my 50 plus private companies, that 50% of this inflation is actually because of supply chain that still hasn't been fixed. Deglobalization, I'll give you just a case study. I've used it so many times. Let's say I'm making gym equipment in Fargo, North Dakota, where I am. And prior to the pandemic, we used to buy all of our metal, our barbells, our screws, some of the infrastructure for the benches from Asia, from China, from Vietnam, from other countries where it was 30% cheaper. We can't get those supplies anymore, partly because the ship that has it on it is stuck at LA Port. Yes, it's still a problem. LA Port has not been fixed yet. And so we are forced to go buy that steel made here domestically. Now, whether that's a good thing or bad thing, we can debate that till the cows come home. However, it's 33% more expensive. So we take those barbells and those benches, mark them up 33%, sell them into an ever-increasing demand market. Our sales have not slowed, but it's 30% more expensive. That, my friends, is inflation. And it's not going to change until I can buy those barbells again in Asia at 30% less, which is no time soon. So the fact is that inflation is self-inflicted by the fact that we are starting to slow down in cooperation with global suppliers. We're fighting with the Chinese, we're cutting off their chips, they're reciprocating. All of that stuff is occurring. And on top of that, people are concerned about domestic supplies of things like semis and oil and gas, because it's the only thing you can count on. You don't want to be begging hand in cap with foreign dictators like Venezuela, or going to see the Saudis and asking them to increase production when they're just not listening. And so at the end of the day, we have this transition occurring, and that's part of the inflation number. The economy itself, though, proven again by numbers today, is doing very, very well. That's because, again, I'm speculating, $6.7 trillion worth of cash was printed in the last 30 months, still sitting in the checking accounts of the consumer, and he and she are spending it. And the idea that you shouldn't manufacture socks in Vietnam because of some protectionism, or the fact that you'd rather pay 5 times more for socks, that makes no sense whatsoever. Yet, if you're building a new chip that actually can fuel AI, artificial intelligence, yeah, I can see I'd rather do that domestically and keep that away from our economic competitors like China, who don't want to play in a level playing field unless they're willing to cooperate. And that's the leverage we have over them. So, different product categories, and I would argue energy, we should remain self-sufficient. That was a mistake the administration made. Prior to the election, the country was completely independent in terms of energy production and oil and gas. And obviously, pipelines were shut down, policy changed. And I think that this current administration realizes they went too fast, too soon. And now we have to pedal back. I'm not trying to play politics, but it'll be reflected in the midterms in just a couple of weeks. And I think what we'll have after that would be very welcome by investors. It would be total gridlock in Washington. That is a wonderful thing. The pause that refreshes, no more bills, no more spending. Let's take a break for a while and then do jump ball in the election, 24 months later. And I think that's a really good outcome, why many people like me are optimistic. The idea of forgiving student debt is very inflationary and incredibly unfair to generations who were burdened with that debt, or in fact couldn't even go to college because they couldn't take on that debt. I have never seen an act more un-American than forgiving student debt. And I hope that gets stuck in litigation and gets reversed. It's outrageous what's going on there, and that's extremely inflationary. And that has nothing to do with politics. That's just bad policy. Doing nothing is always an option. That never happens in government until there's total gridlock, which we're going to get. Assuming the House flips, nobody knows what the Senate's going to do yet. It's jump ball. But bottom line is, gridlock is a great thing. It's a good thing. Politicians can't get any bills done and nothing happens, which is a great option, because it's a form of certainty in the market. And we've had so much printing of money, so many bills, so much bad policy, regardless of what side of the aisle you're on. And I just detailed my own personal opinion about student debt, which I think is just, the more I think about it, the more my blood boils. It's just so unfair. But at the end of the day, all that stuff gets shut down. And that is what I'm looking forward to and very encouraged by. When generations past never got that opportunity. This idea of free money for just the select is absolutely un-American. That is not what built this democracy. It's just outrageous. And the idea that you just pick one cohort, they're the special ones that don't have to pay for their debt. I agree with you. Education costs are too high. Let's work on that problem. Let's figure out a new way to approach that. Let's use technology to maybe make it a more level playing field, but not giving one cohort, just one, the special ones, they get their debt forgiven. Outrageous.
Well, hey, if you wanted another stimulus check, you could always move to California, where Governor Gavin Newsom is now providing inflation relief checks. What's your take on Governor Gavin Newsom providing these to people earning up to $500,000 a year?
Well, there are some ideas that are bad ideas, and there's some ideas that are stupid ideas. Very rarely can you combine both, but that's what you've got here. A really bad and stupid idea, because you're just fueling inflation. Now, the great news about what's going on between state to state is we're finally getting a competition. Idiot management states are losing taxpayers, losing capital from companies, and lots of movement out of them. California, New York, New Jersey, Massachusetts, people are leaving there and companies are leaving there and moving to places like Colorado, North Dakota, Florida, Montana. I am doing my fair part of that too. I'm moving companies out of California. That place is great to visit, but not fit for business. I would never invest a dime there. Same with New York. I've moved a big project out of New York to Norway, a data center there, because New York policy is unstable. And I spend a fair amount of my time on the Hill showing these examples to lawmakers on both sides of the aisle. I'm just one investor, but we make aggregate decisions, millions of them by the day, and those places are uncompetitive. Elizabeth Warren's Massachusetts is not a place for business, and that's why they keep trying to overtax and overtax. They're past 50%, California's past 50%, New York City's past 50%. No problem. People are fungible. They move. They're not stupid. Why would you go sit in a cubicle in a New York high-rise when you can be in great weather in Miami and save a ton of money on taxes? Exactly what everybody's doing. It's unique as a sector. Now, normally portfolio theory would say this: no more than 20% in any one sector, no more than 5% in any one position. That has been a standard in the indexing market for sovereign wealth and pension plans for 100 years. And I abide by those rules in most of the mandates that I'm involved in managing, with the exception of real estate. In our operating company, our holdings in real estate now are at 39%, which is significantly, it's a heavy overweighting. And the majority of that is in Florida, where we are very positive and constructive about the demographics that are occurring there. Now, I've heard all the arguments about Miami sinking underwater, and I get all that. We've been talking about that for 100 years, and there is always that risk in any coastal investment. But when you look at the demographics and demand for properties and office properties in South Beach or Miami proper or Brickell or even Palm Beach or other West Palm Beach and other areas where I am an investor, we see this continuing and on an ongoing basis. And I have to thank the politicians in New York and Massachusetts and California for this wonderful investment opportunity, because this is why prices there have not corrected and why they continue to be very, very buoyant and demand remains strong. The harder you make it to start a business in New York, the better it is for me in Miami. And so, that's the bottom line. And I talk to Mayor Suarez every day and all the other politicians there. They are very open to business. They understand the advantage they have. They're running around the world with their arms open. And on top of all that, we've got the crypto community, which some people think is going to be the 12th sector of the economy in a decade. And I agree with that theory. One of the global centers now is Miami. So I spend about 5-6 months a year there just dealing in that sector.